Welcome. I'm Peter Slayton, Forbes financial columnist, and I'm here with Hamid Moghadam, Chairman and co-CEO of Prologis, and Walter Rakovich, who is the co-CEO of Prologis. How do you see the merger playing out in the competition for investors, and just in the general, how do you see the general REIT universe these days? You've been in it both for a very long time, and it's matured quite a lot, although it's still relatively young.
Well, first of all, as it relates to competition for investors, we happen to have a very, very large combined private capital business, somewhere in the neighborhood of $26 billion invested for private capital sources. I think Prologis, the new Prologis, is a tremendous investment advisor for pension fund investors that are looking to ultimately put their money into high-class distribution facilities throughout the world.
Peter, the only thing I would add to what Walt said is that if you look at who really benefits from this merger, other than our shareholders, the two categories of people that benefit are the customers, which now have a much more capable partner on the other side of the table to meet their facility needs, and private capital investors around the world who can reliably go to one place and be able to invest in every aspect of this product in almost every relevant geography with a very aligned partner that has a lot of skin in the game.
That does beg the question of it's a lot harder to grow in a significant way from this vantage point.
The one big thing about the industry is that you have a number now of very large companies, very, very large companies that can use their currency to do things that they couldn't have done otherwise 10, 15 years ago. And that's a pretty exciting growth channel that we have moving forward.
Peter, let me add something to this. We are bigger because we're active in a much broader area of the world. And the world economy, global trade, is growing at about 7% per year. That is huge. In Asia, it's growing at 15% per year. In the mature economies, it's growing at 3 or 4% per year. So that what we have that's additive, it's not just acquisition. It's not just arbitraging the cost of capital, which is really what the other companies can talk about. We have a development capability that, frankly, the broader it gets, the more powerful it gets, because you can meet the needs of those customers in a larger market area. It has taken us a long time to get to this scale and this level of capability because it's not easy. Right. We tried to build it. These guys built it. It is very, very difficult to be a good developer and investor in the relevant areas of the world. Once you got it, you can earn a lot of money for your shareholders by putting it to good use.
What are you worried about? What are you concerned about going forward as you consolidate your operations and prepare to really move this big new ship forward?
I personally worry most about political influences that set the context for what we do.
You're talking globally or domestically?
Globally, you know, in terms of policies that may be restricting trade or free movement of goods because of protectionism, that would be a threat to our business. Or policies like over-leveraging the economy that could lead to another disaster like we had in the last couple of years, albeit at the smaller scale, or maybe a slow train wreck because of a huge federal debt and the inability to deal with it is a real burden on economic growth. And at the end of the day, our real estate supports economic growth and economic activity. And whatever helps the economy grow faster is good for us.